Hi everyone, this is the second video on the revenue tutorial question where we're going to deal with question B and C. For question B, we are asked to prepare the journal entries for transaction 1 in the General Journal of Accra Limited for the year ended 31st December 2023, given the following two scenarios. Scenario 1 assumes that Accra Limited has settled the account within the 20 days where they will qualify for the early settlement discount. Scenario 2 assumes that instead, Harare Limited only settled the account after the 20 days where no settlement discount will be allowed. Also note that the journal entries for cost of sales can be ignored. I just want to clarify this quickly because I made the mistake in the previous video where I said the machines are an asset. But since in this scenario, the machines are being sold, therefore the machines are inventories. Let's start with scenario 1. We are told that on the 1st of April 2023, which is the transaction date, Accra Limited, so we sold a machine along with a 2-year maintenance contract on credit to Harare Limited. The total invoice amounted to 210,000 rand. The 36,000 rand was for a maintenance contract. Even though we expect our debtor to settle the account within the 20 days, we're going to take this full 210,000 to our debtors control account. So since the debtors control are an asset, they increase on the debit side, and this is shown in the statement of financial position. However, when it comes to revenue, we only recognize the revenue from the sale of the machine after accounting for the early settlement discount. Since we expect Harare Limited to settle the invoice within the 20 days, we only recognize the revenue from the machine. With regards to the maintenance contract, however, since on the transaction date we haven't performed any obligation, we have to take the money that we received for the maintenance contract after allowing for the early settlement discount. We recognize it as the revenue that is received in advance. This is a liability in our books, and liabilities increase on the credit side. Therefore, we will have to create an allowance for settlement discount account, which is a negative asset. It increases on the credit side and shown on the statement of financial position. On settlement date, since Harare Limited they paid within the 20-day period that is allowed for a settlement discount, they're only going to pay the 97% of the 210,000 rand, which amounts to 203,700. Therefore, we have to reverse or remove the allowance for settlement discount allowed by debiting it. You can see here it was on the credit side on the transaction date, and therefore now we remove it and make it 0 on the settlement date, and also we credit the full 210,000 because they paid us all their amount that it was due to us. Therefore, you will see that the net effect here, these two transactions will cancel each other, and our debtors control account, it will amount to 0. Now, what happens at the end of our financial year? We saw that here, we said that the amount that we received for the maintenance contract, it is revenue received in advance. because on transaction date there was no performance obligation that we met, but by the end of the financial year we met some of that performance obligation. Therefore, we have to reduce our liability and increase our revenue. We can see that our revenue received in advance, which is a liability account, it decreased on the debit side, and our revenue increased by the same amount on the credit side because we have met some of our performance obligation. And also you can see that there's some amount that is going to be left in the revenue received in advance, which is a liability, and that will reduce as we meet our performance obligation. Let's move on to scenario 2, when Harare Limited does not qualify for an early settlement discount. You can see that on transaction date, the accounts, you can see that there are the same transactions as in the scenario 1. Our debtors control account has the full 210,000 rand. We only recognize the revenue from the sale of the machine. Then the amount that we received for the maintenance contract, it will be income, the revenue received in advance, after accounting for the early settlement discount, because we expect them to pay within the 20-day period. And also we created an allowance for settlement discount allowed, which is a negative asset on the credit side. Now, what happens if our debtor does not pay within the 20-day period? If you can go back here, the transaction date is on the 1st of April 2023. If they settle their invoice within this 20-day period, so meaning that the last day where they will be allowed a settlement discount will be the 20th of April 2023. So it is the latest date where they will be allowed a settlement discount. What that happens if we receive no payment? Our settlement discount will be forfeited, meaning that we're gonna debit our allowance for settlement discount allowed account, so that the net becomes 0. These two accounts will amount to 0. Then we adjust our revenue upward. We increase by 3% of the selling price of our machine, the machine that we sold to Harare Limited. We increase our revenue by that 174,000 times the 3%, it amounts to 5,220. Then we increase our liability, which is the revenue received in advance, because they no longer qualify for the settlement discount. So the maintenance contract will be charged on the full 36,000 rand. So you will see, if you add these two amounts together, you're going to get that 36,000 rand. Then what happens on the settlement date? They only paid us on the 30th of April. They will have to pay the full amount since they did not qualify for the settlement discount. Since we are receiving cash, our bank account will increase by 210,000, and our debtors control, it decreases by 210,000. 35,000, meaning that they no longer owe us anything. Then, at our financial year end, on the 31st of December 2023, we met some of our performance obligation and we have to increase our revenue. Therefore, revenue will increase on the credit side by 35,500 and the revenue received in advance will decrease by the 13,500, which reduces our liability, increases our revenue. And you will see that the revenue received in advance is it increased here, then it decreases, meaning that now it's standing around 22,500, which we got by 34,920 minus plus the 180 minus the minus the 13,500, which is gonna give us the 22,500. Yeah, we are done with our scenario 2. Now we're gonna move on to our question C, where we are asked, on which date can the revenue from transaction 3 below be recognized? So we have read this scenario and they told us, and we have identified that it's a build and hold arrangement. And I got this from your slides. They told us the entity will recognize the revenue on the date that the performance obligation to transfer the product has been met. So this is when the goods are ready for delivery. From the scenario here, they told us the machines were completed and ready for delivery on the 12th of February 2024, meaning that this is the date that we will recognize our revenue. And this is just the solution that we got from the memo. Thank you very much for your time and I wish you all the best. Thank you.